You've been lied to about candlesticks. Question for you. This is the perfect buying signal, perfect zone. Will we go up? Is it this one or this one or this one? Candles only tell half of the story. Even the billionaire trader who created the Japanese candlesticks wrote about tracking something else that no one speaks about. If you want better entry signals so you can avoid fake outs and become consistently profitable, this video is for you. I'm going to teach you how to use Orderflow for pro level entries, the top tools to use, and show real live examples. After watching this video, you should be able to review your losing trades and instantly spot the fake outs and false signals. So let's get right into it. Candles are good, but what I'm going to show you is better. And everything that I say today is for me. And I've learned what I've learned today from professional traders. All right, so let's take it back. Now, we all know the line chart, and most of us would never go back to using the line chart exclusively because the line chart, it only shows us two coordinates, price and time. Now, the candlestick chart though, it gives us multiple points of data. We have the open, the low, the high, and the close. And this gives us the behavior of buyers and sellers during this particular time. So let's say this is a 5-minute candle. Okay. Now, where's the problem? If you ask the majority of traders now, they are looking for smart money. They're looking for investors. They're looking for high liquidity. You cannot identify the institutions by price action alone in most cases. If you look at these two candles, they are exactly the same. Let's say they're bullish candles. Same open, same low, same high, same close. What are we missing here? The amount of contracts traded here is 30 and the amount of contracts traded here is 30,000. So price action looks exactly the same, but the participants, the strength, the interest for price to move up is 1,000 times greater here. So when we combine candles and order flow, one of the building blocks of order flow is volume. So this is what we want to see, the amount of contracts traded here at this particular time. This will communicate strength and interest. There are more concepts that we're going to cover around order flow and volume. Now, one more analogy. So in this video, I want to help you solve a problem. A lot of people, they look at levels, price approaches that level, and then it doesn't reach the level and it returns. Sometimes price reaches a level and then it reverses in the level. Sometimes price goes through that level and then reverses. And sometimes price goes through that level and never comes back, right? So one of the problems here is if we use price action only, we may see the same exact patterns in our level, but we won't be able to identify the fake out. Order flow and volume will allow us to be able to identify fake outs. Also, order flow and volume will allow us to identify when price is likely not to come up to our zone. Order flow and volume will also help us identify when price goes through our zone and then returns back to it if we're likely to continue down. This was all communicated from order flow and is missing from most of the smart money concept conversations. And then when we have a continuation pattern like we have here, order flow and the amount of volume that's being traded here will also communicate how likely price is to continue. So quick analogy, let's say we had someone pushing a car up a hill, old school car drawing, and we had 3 people pushing that car. So this is 3 people pushing the car. And that car may move up the mountain, up the hill, and get to a point where it starts to slide back because it's only 3 people. Now, if you were a bystander and you wanted to decide whether or not you're going to hop in the car, and you may see this go up and go down, go up and go down because there's only 3 people. Now, let's say that you had here the same movement up and down, but behind the move, you had 30 people. Now, it's likely that maybe 30 people putting their strength into the move, or maybe if you had a tow truck, the tow truck has more strength and can potentially push that car up the hill, right? So same movement, but there's more effort, and seeing how many participants are behind the move will help give you confidence and give you conviction and help you avoid a lot of the false signals that we see in the market day to day. So let's talk about order flow in detail. There's a bunch of different platforms that will give us what we need. But let's talk about, there's 2 points I want to define, because order flow has become a buzzword. Everybody's using it. And I want to take us back to why we would even study order flow and where the real edge is. I see people talking about order flow and they just point to a price chart. Order flow has a much greater meaning, okay? 3 things I want to talk about. The definition, right? It's a type of trading that gives us an edge when we analyze, okay, advertised orders and executed orders. So everybody that says you shouldn't add order flow, they're missing the point. They think you're just complicating things, but we are actually trading based on advertised and executed orders. And now more than ever, executed orders because of high frequency trading algorithms. So we're looking at the volume of orders that were executed in order to do 2 things. We want to profit off of imbalances. That's mainly what we want to do. So edge appears for a small amount of time, and we can react and see when edge appears for us. We can see when there's a likelihood of imbalance or actual imbalances. We can see them when we look at executed orders in the context of our trade ideas. Okay, so we want to find the imbalances between buyers and sellers, okay, or between supply and demand. So now I want to talk about the theory real quick. Just a quick note. There's something called auction theory or auction market theory. It's the idea that markets move higher or lower aggressively until price discovers a level of balance where there's a fair value. For example, okay, let's say we have a Ferrari and this costs $300,000. Fair value may fluctuate here. And let's say if there's an event that happens and prices go up. As prices go up, the buyers start to become more reluctant to buy at higher prices. And the sellers become more aggressive because they want to sell their Ferraris. So eventually, we may reach a point to where we become balanced, or price may drop back to this point. And then let's say there's a recall on something related to Ferrari and prices drop. It becomes the opposite, right? Where sellers, they begin to sell, but they are more reluctant to sell at lower prices. And some may be buying at these lower prices with the assumption that they may be able to fix the car up, right? So what we are trying to spot are these imbalances here. Order flow will show us if an imbalance will continue, a trend will continue, or if prices will turn back, right? So technical analysis, the fake outs that I mentioned in the beginning, it's easier to suffer from those if you only have technical charts. But if you have volume and order flow, actual executed orders, and the volume of those orders, then you can see the volume of buyers that are pushing price higher, or you can see the volume of sellers that are pushing price lower. And you can gauge the interest through a combination of technical analysis and order flow. So I just want you to remember that the order flow trader, we are trying to determine when the market is balanced and imbalanced. If the market is imbalanced, then we should be trending. If the market is balanced, we should be ranging. So this, coupled with news catalysts, technical catalysts, the right types of zones, and actual executed orders, this all brings together a formidable trader and a formidable strategy. I want to show you some tools related to order flow now. The first and most commonly used tool is the level 2, the DOM, and the time and sells. Okay, so the DOM here, you have the bid column. This column represents the limit orders for passive buyers. The ask column represents the limit orders for the passive sellers. These are the advertised orders. What traders would do is get a picture of supply and demand. They find large blocks where are levels, prices where there were larger levels. And this is used to determine when there's high liquidity, low liquidity, supply and demand zones were perceived through the advertised orders. And then time and sells shows the executed orders. So orders that are actually executed. So you get a flow, you get a rhythm. You see at this price, 5622.25, you see these orders being executed at that level. And you start to get a flow and a picture of where price is going. Something that has become very, very popular nowadays is Bookmap. What Bookmap does, it visualizes the level 2, okay? It visualizes the DOM. And I know this looks like a lot. It is, but these heat maps will show you potential levels of liquidity, real liquidity and false liquidity. So this is a tool that some traders tend to use, but I think a lot of traders don't actually understand why they should use these tools. So most shy away from it. So I'm going to start off with some of the more basic tools, some of the more basic concepts. We won't do level 2 in this video. We won't do Bookmap in this video. I want to focus on 2 that are easy to understand. You have the volume delta and the volume profile. Let's take a look at those. Okay, let's talk about cumulative delta. If you haven't seen my video on how to use volume, click the link in the right-hand corner. We're going to go a step deeper. So when it comes to order flow, we are looking for imbalances, an imbalance between buyers and sellers. That's it. If we can spot an imbalance between buyers and sellers, that's a small window of edge for us. And it may last for 5 minutes, 15 minutes, 1 hour, 4 hours, or for days. I'm going to show you from the lower time frame, but I'm going to explain the concept first. So you want to understand the concept of delta. So delta is basically the difference between the buyers and the sellers. So we take the buying pressure and the selling pressure, okay, and subtract it. And then this will give us delta. Let's say we have 200 contracts that are bought at the ask and 500 contracts that are sold at the bid. Then we will have a negative delta of 300. This is signifying that there is more selling pressure at a particular time than buying pressure. And if this continues to happen, let's say we have negative 300, negative 500, negative 800, and it's escalating like this, this is showing an imbalance. Okay. So the general rule is if delta is greater than 0, then that's buyers. There's an imbalance with the buyers buying more buying pressure. If delta is less than 0, then we have more selling pressure. Okay. So we can look at this plotted out on the chart. If you look at the chart here, there's an indicator that shows when you have aggressive buying or more delta. If you look at here, so here's the line is 0. This is showing more delta on the buying side. So as price breaks through this level here, this is a resistance level. As price is breaking through, that volume is rising. Okay, the delta is rising. So this is confirmation. This is convergence with price and volume delta. All right. And as price comes back down to this level, we have an imbalance between buyers and sellers here. There's more selling pressure, but relatively to the buying pressure, this is a lot lower. Okay. So this gives us a sign that this is likely to hold. This level is likely to hold right now. So as price starts to turn, what do we see? We see price action rising and we see the delta rising as well relatively. So this gives us a story. Now, this is a lot to look at here in this format. So there's something called cumulative delta. Cumulative delta, it plots out the delta on the chart for us. Same example here, as price breaks this resistance, look at the delta. Look at the difference here. So small movement here, major, massive amount of delta on the buy side relative to the previous volume. So this is confirmation as we break through that resistance level, and then another delta imbalance. And as price drops back down, we see on the pullback, the delta is pulling back slightly, but relative to the buy, small amount of selling pressure here. Okay. So as price continues to rise, also we see a rise in the volume delta. So this is confirmation for someone that is in a trade that the trade is likely to continue as it's breaking these levels, But not only is it breaking levels with the price, we also see the volume is increasing. Even on this pullback here, we see prices pulling back, but look at the volume relative to the pullback. And then we even have prices pull back even more, but the volume is increasing. So this can be an indication that we are likely to continue. So that's how we'll use volume data. So with cumulative volume, we'll be looking for validation, right? And then we'll also be looking for divergence. So it's two concepts I want to talk about in regards to divergence. These are very important concepts, and this will help us dominate in the markets when we use this in confluence with our overall trade idea. So one concept is exhaustion. Exhaustion exists when less buyers are willing to buy at new highs or less sellers are willing to sell at lows. So we want to look for these points when we start to see that price action is rising, but we see when in regards to volume, we're going to see a slowdown in volume here. Okay. And on the sell side, exhaustion starts to happen. We want to see like a slowdown in that volume. Why is that? Because this will indicate to us that we have a potential reversal. Here's an example of exhaustion. So price comes and creates a new high here. And then we start to see the sideways movement. Now, this same high over here on Delta. So Delta should be pretty much aligned with price. So as price pushes down, we see the sellers are in control. And then as price turns here aggressively, the move from the Delta isn't aggressive from the buyers, right? We failed to create a new high here with the Delta. So this is showing that the buying volume, the buyers are getting exhausted, right? So even when you have this push, we still haven't created a new high. So this is an indication that we are potentially, this move is not a strong move. A lot of us can get faked out when a new high is broken. We're looking to scalp and continue, but the Delta here diverges from price. This can help prepare us for a potential slowdown in price. And that's exactly what happened right before the close. All right, let's talk about absorption, another very powerful concept. So absorption is when aggressive buyers are unable to take price higher, but the volume that's traded continues higher. So let's say this is a volume bar and this is price, and price is not able to continue higher, but there's a large amount of buying delta, right? This can communicate that there are potentially large passive sellers here that are absorbing the volume. And that if we're speculating and we want price to go up, we may be headed into a potential reversal. We don't want to be buying against the passive large sellers here. On the flip side, absorption can happen when the sellers aren't able to push price because there's a large passive buyer here or several, but the selling volume continues. The delta on the sell side continues. So a lot of contracts sold here, but the price doesn't reflect it. So that's absorption. That move. So let's say we are trading a sell and we're trying to ride that wave lower. And if we see a large buyer there, we see the sell volume being absorbed, then it's likely that we're going to stall and consolidate, or we may see a reversal. So these are early signs that we can't see with price alone. All right, so here is a case of absorption. So let's say we are in a sell here and our price is declining as well as our selling delta, okay, volume delta is declining. And then we come here and we see large amount of selling volume, selling delta, but price is not moving. That's an indication that we have passive buyers here that are absorbing the orders here, right? So if we were holding on to the sell, this is a potential area of strong demand. So we want to get up out of there. So we may consider exiting when we see our reasons to close. Okay, let's jump into the last one for this video, and that's volume profile. Now, again, you have to digest this information and then learn how to incorporate it into your strategy. None of these things that I mentioned are standalone confirmations by themselves. When you have the combination of a great trade idea, catalyst, a great setup, and then you incorporate order flow and volume, then you have a great strategy that can help you be consistently profitable. And this is the way pros trade. So now volume profile visualizes order flow for us, okay? It visualizes it. You have different types of volume profile. The most basic one that you already know about is the x-axis volume profile, right? You see these spikes in volume here. This is the x-axis volume profile. Another one that I recommend as you start to understand more about volume, I recommend that you start to incorporate will be the y-axis volume profile, right? So what this one does, there's a few benefits, right, of this one. We can use them for support and resistance. Okay, many times when you look at a chart, you see multiple touches on a particular chart, and you don't know the volume traded at certain levels. So a lot of times you're waiting for price to go to that level and you don't know if it's going to hold. Many people reach out to me and say, hey, I struggle with support and resistance levels. Should it be higher? Should it be lower? Where should it be, right? So a lot of times the support and resistance, we can use volume profile to target the areas where you have the most volume as areas that will likely continue to be support and resistance in the future. So a lot of us look for supply and demand zones based on a candle or a drop-based drop, or just the confirmation candle. I'm trying to look for these zones. If you want to find them, use the volume profile. Look at where the most liquidity is based on contracts actually executed orders, right? If you go back to advertised orders and executed orders, right? So support and resistance is one. Another one is, again, imbalances. So we want to see where imbalances are. Number 3 is determine the strength of a trend or breakout. That's another one. Also places that you can, your TP, you have your take profit, also your stop loss based on high liquidity areas. Okay. So let's break down what the volume profile, this particular one is, which is the most popular style of it. And I'm going to do a more detailed video on this, but I'm just kind of giving you a primer. So you're going to have your high. Okay. You're going to have your low. This is the low of price, just like the candle. You have the high, you have the low. This is going to be your open here. That's why it's red, like the bearish candle. And this is going to be the close. And on the green candle, this is the open and this is the close. Okay. Now you have something called the point of control, POC or POC. Okay. And the point of control here shows where the most volume was traded for this particular time interval. Okay. So here, the most volume was traded here. Here, the most volume was traded. Okay. This is a significant area. Now, lastly, you have two things. You have a high volume node, which is called a high volume node or HVN. And then you also have a low volume node, right? So these are used for two different things. The high volume is used for potential reversals. Those are high areas of liquidity. The low volume, normally we expect price to trade through these areas pretty easily. Okay, so I'm going to do a dedicated video on all of these concepts, but I'm just showing you how you can add these to your charts and incorporate these into your trading. So let's look at an example of how you would use a volume profile. Before I go on, I'm going to stop this video here and make a part 2. Before I continue this series, please let me know in the comments if you enjoy this content by liking, subscribing, and commenting. If you like this series, I'll create a full playlist on Orderflow. I'll go into each of the indicators that I listed here, and I'll show you a full trading strategy, full scalping strategy that you can use using some of these indicators together to be profitable in the markets. Thanks for your support. If you want to see the video that I did on footprint charts, watch this video.